Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Hough, in for Jack Otter. Coming up, stocks stalled this past week as investors await clarity on when the Fed will cut interest rates. Big Tech's Magnificent Seven haven't been riding quite as high. RBC Capital Markets head of U.S. equity strategy and one of Barron's top 100 women in finance, Lori Calvasina, is here with her take. And there's a TikTok battle on Capitol Hill, and I don't mean a dance-off. We'll look at the winners, losers, and possible buyers if Chinese parent company ByteDance is forced to sell. Then, that's one big rocket. SpaceX completing a record-setting launch. What investors here on Earth need to know. But we begin with our expert panel and three things investors ought to be thinking about right now on the Barron's Roundtable. My colleagues, Ben Levisohn, Al Root, and Megan Lenhart. Ben, the market was down a smidgen this past week. I, for one, am outraged. What happened?
Well, I mean, it was the S&P fell for a second week in a row, and this is the first time it's fallen for 2 weeks since October. So clearly the world is ending. Okay, maybe not. As you said, it fell 0.1%. We had some inflation readings. The first one came in, the consumer price index, hot, but the market was okay with that. It was the second one, the producer price index, which it really was hit by commodity prices rising that really caused the market to freak out. Gas prices are going up. And so you're getting this rotation going on in the market where the Magnificent Seven, they're not doing so well, but you're seeing other things like materials, mining companies, they're doing much better. And so it's just a market where things are moving around.
Which of the Magnificent Seven has been demagnificented the most, and which is the most magnificent of the remaining?
Well, Tesla's been the ugliest of the bunch, but Apple's down for the year. Alphabet, they're basically flat. Nvidia's still the one that's riding high. Meta's done okay as well.
The next big rotation in the market, if it's not big tech, you said materials. What
materials? You got to look at energy. Oil prices are rising. There's these concerns over the Ukrainians taking out a refinery with drones. That's going to help oil prices and gas prices. Those are going to go up. That's going to be good for energy stocks.
What are you waiting to hear from the Fed next week?
Well, we know that they're not going to cut interest rates in March, and they may not do it until July. But what people really want to see is what happens to the dots. The dots have shown three cuts by the end of the year. Now there's concern that it's going to be 2 cuts. Is it going to be 1 cut? Is it going to be no cuts? We're not sure yet. And depending on how that goes, I mean, I think as long as the Fed is still leaning towards cutting, that will be okay for the market and supportive of the market. But if it starts sounding at all hawkish, that's going to be a problem.
Those little dots, it all comes down to the dots. Always.
Dots, yes.
Al, Boeing, the stock, had a terrible week again. Tell us about it.
Well, I mean, Boeing, the company, had a difficult week too, and it's really just a constant drip of bad news. So the stock down 7% for the week. Now it's down about 30% year to date. One of the 2 or 3 worst performers in the entire S&P 500, depending on how things finished up. There was a wheel falling off a United plane last week. That was a 22-year-old plane. There was the story of the turbulence on the LATAM flight with people getting pushed into people's seats. Everything has become a Boeing story. On the more serious end, United CEO Scott Kirby sort of talking down the 737 MAX jet, looking for additional Airbus planes. That doesn't sound good. You had a New York Times story that told us how bad Boeing performed in the FAA audit after that door plug blew out of a plane. And then there was an FAA briefing. Again, more negative news about Boeing.
Somewhere out there is a contrarian investor saying, okay, Al, you've got my interest. It can't get worse from here. Can it get worse from here?
Yes, it could get worse from here. Listen, so we wrote a story in February, basically said, you know, Boeing, what the problem is this constant drip of bad news is not going to stop. Could I imagine a scenario where an airline cancels orders for MAX 10? Yes. Could I imagine a scenario, MAX 10, the longest version of the MAX, not yet certified for flight? Could I imagine a scenario where Boeing says, you know what, we can't make all of these planes that we thought we were going to make. We're only going to make 30 a month, not 40 a month, as sort of is initially planned. I could absolutely imagine that. So the flow of bad news, or the flow of news, is still negative. We need to wait for a turn, so you just need to be patient.
Megan, Al's talking about constant drips of bad news, but you've got potential good news for people who might be selling a home. Real estate commissions could be headed lower. Tell us about that.
So the National Association of Realtors just today agreed to settle a series of lawsuits that we've all had our eyes on. They're going to pay about a little north of $400 million to settle the suit. But more interesting was the agreement that it was going to shift its rules on commissions a bit. So historically, the trade groups essentially led a system where home sellers agreed to pay 5-6% for commissions when listing their homes. And this is, split evenly between the sellers and the buyers. Now, those handcuffs, those rules of the road, are coming apart. And so what that means is, under the proposed settlement, home listings would no longer include upfront offers for the buyer's agents using multiple listing services. There's a lot of details in there, and of course, we're still sussing this out. It's a bit like, many of the things that we're talking about these days. Devil's in the details.
Ben, suss away.
Yeah, what scares me here is sounds to me like the cable bundle going away. They say, oh, it's going to make things cheaper for me, but really what it ends up doing is I have to own 6 streaming services, and I'm spending more money, and that's it feels like is going to happen here. As a buyer of a house, I'm going to have to spend more. The seller's going to have to do their thing, and we're all going to end up.
We've got about 20 seconds left. What, if anything, does it mean for house prices? Should I sell my house and move with my family into Al's house? We've got 2 dogs, Al, and one's a shedder. I'm going to tell you right now. What should we do?
So I think it depends on who you talk to. Yes, potentially this could substantially lower overall home prices. Certainly the Richmond Fed and others have really talked up the benefits here. Bottom line is, this is going to take a few years, according to pretty much everyone, to really roll out for consumers and, of course, buyers and sellers.
Well, thank you all.